morning, everybody. Welcome back to the Opportunistic Trader. It is just after 11 o'clock on January 29th, and we're joined by Tracy Shuchart, who's been joining us regularly to talk to us about technical analysis, taking us through the major markets that she looks at, giving us a glimpse at her charts and some of her thoughts. How's it going today, Tracy?
Good. I figured we would just start with gold today because we're literally right up against resistance.
Yeah, we got a lot going on. Finally breaking above 1300. We got the Fed tomorrow. We've had a nice move from 1200 to 1300. It's been a bit slow, and then we consolidated around 1300 and between 1200, 1280 and 1300. So what's it looking like here?
Absolutely. Well, I already rolled to J, so we do have a gap here. So on the J contract, we're literally up. I talked about this 1307 to 1316 area. 1316 is a value area high. So we're literally sitting right on that. And we have a gap. And also this move up, this last portion of the move up has been on declining volume. So, I am looking at this area for a potential short to fill the gap and to at least fill the gap and then see how far we go. I mean, we have a potential to go back to 1286.
So do you think that it could be something with the Fed tomorrow that could be the catalyst, or, once again, you're just looking at the chart, so it could be anything?
Yeah, I'm just looking at the charts. Absolutely, it could be a Fed. It could, I'm still I still think the dollar, strong dollar narrative is still playing out. We're still, we're still at 95. So, it kind of goes with the same thing that I was talking about before. Gold and the dollar can move up together. However, that's over. I'm looking at that. When I say that, I mean that over a longer time frame. Intraday, you're still going to find that the dollar moves are way on gold. If that makes sense.
Sure, absolutely.
So, but exactly, so for gold right now, I'm looking for a pullback in this area, at least to fill this gap. If not down, if that doesn't hold, then, retest this 1286.
So if you were to you're looking for a pullback, would you actually enter the short now, or would you rather see it pull back a few bucks, then enter the short? And then my question is, where would your stop be if you were to enter short at any point?
If I were to enter short right at this 316 area, you could use a very tight stop with it. You could use, I'd say like a 1320 stop on that.
Okay.
I actually would, yes, enter that right now with a tight stop.
Yeah, no, that makes sense. So that is pretty tight, though, especially when you get, a lot of random noise around the Fed, like even potentially.
Right. Well, I'm kind of more looking at it more of a, just a very short-term intraday trade. If you wanted to play this for, say, a swing trade for something bigger, then you would probably have to have a wider stop on that.
Yeah. And then I guess, I don't know what you had next in store, but if you had maybe a chart of the dollar, and I'm kind of interested in your thoughts on the dollar here.
Okay.
If not, we can come back to it.
Yeah, no, I have USD right here. DXY actually is the chart that we're looking at.
It's amazing how quiet DXY has been. Euro's been between 112.80 and 114.50 basically, and but it's really been very quiet for the past 4 or 5 months.
Yeah, absolutely. Really, we've kind of been range bound. If you just look out a little, we've been, since October, we've been sort of in this 95 to 97 area. So, we really have been in quite a tight range for the last, 3-4 months. So I'm kind of looking at, so far, we came down last week and this 95 level held again. We came up, we hit resistance up here a little bit. We, backed off a little bit. And now we have a minor resistance. If you look left, we have a minor resistance right here that we're currently bouncing off of. So again, to me, this is still a constructive long. In fact, it still would be a constructive long even if we traded back down to 94.
I remember back in November, and I could pull up the tape. I could take a look for when it was. It might even be October. But you were talking about a trade for a few segments when you came on of long gold, long dollar, and that's continued to work well. When you think about it, the dollar side's probably been flat, and the gold's moved up. I don't know exactly when we were talking about it, but from the
Exactly.
1260 ish range, it's done probably $50 or so.
Yeah, exactly. So anyway, this is again still constructive to me. Again, it could trade down to 94. It still would be constructive, um, you know, to me in the longer term.
Yeah,
So that's
and
kind of
once
what I'm
again,
looking
it'll
at.
be, tomorrow that'll be in focus with the Fed. But at the same time, I don't know.
Absolutely.
Me personally, I think the Fed's going to be less of an event tomorrow. I think that they have a few months before they're expected to act. So I think they're going to kind of be as non-eventful as possible. But you
I
never
think they're
know.
going to try to be as the middle of the road as possible. Kind of, the economy is strong, but but we're cautious. Kind of
There's
want to
just so
see.
many uncertainties that they don't know about right now. We have government shutdown, the way Q4 went, the way the markets were, how that's going to affect things, how China trade, which we have no idea about. So there are a lot of question marks. So it's tough for them to really give a much conviction on a guidance when there's so many uncertainties.
Right, exactly. So, I mean, we'll wait to see what happens, but I tend to agree with you. It's probably going to be less of an event. Nobody was expecting a rate hike in January anyway, so
Right,
it's
right.
all going to be hanging on to every word that they say,
So is
which
this a
I
chart of euro here specific?
so this is yeah. So I moved on to euro. I mean, basically, I very negative the euro. That still hasn't changed. I think we've had a bounce recently off of this support here, but still, all in all, I mean, Europe doesn't look very well. I'm still negative on euro, and I think that any dip in the euro, because the U.S. dollar index is so heavily weighted on euro, that's also going to affect USD or DXY. So, a big move in euro down is going to automatically cause the dollar to go up
Right.
just because of how the index is weighted.
Yeah, absolutely. It's over 50% euro.
Right.
So.
So, so again, to me, this is, I'm still looking for this uh, 111 area. Again, on Thursday, I just wanted to remind everybody, it is a SOMA day where it's going to be one of the largest SOMA days that they have, where they're draining liquidity from the markets. So again, that is a currency play trade,
So how would
which
you
would
typically
be
do that? Take me through that because we've talked about it before, after, but here
right.
you are, you're talking about it for Thursday. So would this be something that maybe like Wednesday at like
So
4 p.m. Eastern time
yeah,
or noon Eastern, you'd look to buy dollars and then maybe look to exit the next day for 24 hours?
yeah. So what I would do is I would either, it depends on technically where it landed, but I would be looking either on the reopen or right at the close to go short, or if you're up at 4 a.m. Eastern time, that's when I would put a short on and then hold that until like 1:30, 2:30 to the next day.
Short euros,
So
long dollars, right?
correct.
Right. And that's Thursday. Okay, good. So I know in the past you've come on a few times, and I believe the first day of the year, or second day of the year, you mentioned it was a Soma day and it was a huge dollar day, and so and then there was once
Right. So
also in
it's
December where it worked pretty well.
yeah. So I mean, they've been working quite well, and given the fact that this is one of the larger ones, I have I would say, it's a good trade to attempt, obviously with stops and according to your risk tolerance.
Sure. What about the old crude oil? We've had a lot of movement there. Venezuela's been in the, people have been talking about Venezuela. We're up 2.5% today, 53 and a quarter right now. We have API later today and then DOE tomorrow. What is the chart telling us?
So, I mean, again, nothing's changed since we've talked the last couple of times. We're still trading in this consolidation range. So either, the play is either to, trade this intraday according to, your trade plan, or, for a longer or a bigger, kind of a bigger momentum trade, I would wait until it either, broke this 54.50 area, came back and retested it, and then you could take the long, or it broke significantly this 50.31, retested, and attempt a short. But really, we haven't gone anywhere since January. This whole month, we've gone sideways, as you can see. So again, I would be waiting for a breakout and take that more as a momentum trade to kind of see, because right now we just don't have any direction. And even with this Venezuela news, you would think that this would have already broken to the upside, but it hasn't. So that makes me,
pretty interesting chart when you take a look at it. If you take out the last part of December and the first part, that 3-week period, basically where it plunged and came back, we're basically flat then for the past, 8 weeks or so, or something.
Yeah, since 11/23.
More like a $50 to $55 range, basically.
Exactly, and this is this is exactly what happened. This is right when OPEC came and they said they wanted to stabilize the markets and they were going to put quotas back, and we sort of, chopped out. The market was stable, and then we had that massive sell-off in December. The market bounced right back off, and we're back trading in this range where, OPEC wanted a stable market. So we know that that's not going to last forever, but we are trading in the range that they kind of had intended it to trade in.
Absolutely. All right, and then finally, let's take a look at equities. Everybody's pretty interested here. We're trading 26.34. We traded down to 23.25 in, I believe it was December 26th, having a nice rebound from there. Now we're in similar to crude in a way. We've had about a 10-day consolidation or so.
Yes. So, really, this chart actually looks a lot like crude. If we do this, we literally have this same, we literally have the same consolidation area going on right here, right? So again, this market is, still looking for a direction. I think that, I think in February, we'll see some type of resolution to which direction this market wants to take. And so that's what I'm kind of waiting for. Right now we either need a breakout over 2701, or we need 2600 to break.
Okay, so in between that, you're kind of considering it no man's land and some short-term opportunities, but for more of a multi-week move or multi-day move, you're really looking for those further out levels.
I'm looking for the market to pick a direction here. Again, this is nice for day trading, but if you're trying to swing a move, right here is kind of the area where you're going to get chopped up.
From the friends that you talk to, I know you talk to a lot of different traders, a lot of different people. What's the sense you get? We sold off heavily in December. We've rebounded. Are people still short?
I know. I talk to a lot of people, and it's either people are passionately long or they're passionately short. So it's a kind of a mixed feeling out there as far as, I can, from my take on, just, retail traders out there. So it's, either people are 100% sure it's, we're going to, make new highs, or, we're going back to, retest the low.
Right.
It's kind of a mixed bag there. As far as CTAs are concerned, they're pretty much neutral in this area. So they're like system traders. They wouldn't be trading in this area. Their short systems would start kicking in under 25.50, and their long systems would start kicking in over 27.50. So, those are the kind of areas, CTA systematic traders would
Yeah,
be
CTAs
looking.
had a bad year last year. They had actually a pretty decent December, as a matter of fact, but they're not off to a good start in January. They started the year short equity, short oil, and they, rode that out for a little while. They've, some have flipped or, gotten out of that, but not off to a good January. There's actually a big CTA expo right now in Miami, so a lot of people I know and a lot of people are congregating down there talking about the markets. And last year, if you remember, it was one of the best Januaries ever, one of the best months ever for CTAs. When we came off of 2017, equities were moving higher. January equities continued to move higher. I believe
Right.
energy similar, fixed income moved well, and so January last year was very good. This year so far is not a great start. None of the
Yeah,
indices.
we're just kind of flat in a lot of things, well, at least in crude and in the indices, which, are really moving in tandem
Yeah.
lately.
What else are you looking at? Anything catching your eye, or that about it?
Not really. I'm still looking to, still CAD, my CAD. I still think bounces are short in CAD. For many reasons. It's actually coming off a little bit today from the highs. We got a nice bounce back to 75.50 area, which was kind of a gift, I think. But anywhere between 75 and 76, I'm looking to short any kind of bounces in that area.
Sounds good. All right. Well, we will keep an eye on everything, and I appreciate it. A lot of good insight. Looks like for the most part, like what you're saying, S&P and crude have kind of consolidated, and they're waiting for the next move, whether it be from the Fed or from earnings or something in trade. But it'll be interesting here.
Exactly.
All right. Thanks a lot, Tracy. Tracy Shuchart joining us, talking technical analysis. We appreciate it. We'll talk to you later.
All right. Thanks.